What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about Tesla stock. We'll break down ARK Invest's robo-taxis and what their thesis is moving forward for this $28 trillion market. I'm also going to break down Elon Musk's tweet, which he retweeted to Hallmark's catalog, and also just in from Tom Lee retweeting Dan Ives' tweet on Tesla as well. So we got lots to unpack, lots to uncover in this video. Tesla last week had one of the most volatile weeks we've seen in a while after pushing up Monday, Tuesday, Wednesday. Huge sell-off on Thursday, down over 8%, and then Friday recovering just shy of 3%. So a little bit back and forth here. Of course, it was very much volatile. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, and don't forget to subscribe to the channel if you're just joining us for the first time. And again, I want to remind everyone that you can access our entire platform and of course lock in this special price of 51% discount that is only valid until the end of this month with 4 more spots left. And you will be able to access the entire MoneyVest platform, do your full comprehensive fundamental analysis on this platform here. And of course, a lot of other features and functionality like your portfolio management, your macro dashboard, everything is going to be available in future updates. My team is working on it on a regular basis over the next 18 months. This is a long project. This platform is going to be ready for institutions to use as well. That's how much data we're going to be putting in on this platform with so many different tools and calculators and features. So if you want to lock this price in, because eventually this is going to be enterprise scale, link's going to be down below. We'd love to have you on board if you want to be a part of this project, and we're going to be taking your feedback very, very seriously. So we'd love to have you on board. If you have any questions, let me know. 4 more spots left, and you can lock it in for 51% discount until the end of this month. So link's going to be down below. So first things first, Tesla here. This was the volatility on the week, up almost 3% on Friday, pushing up to $240. It was trading well over $250 at one point. I was on my way back home in a train when I was looking at Tesla stock price during that time. It was a 4 or 5 hour train, so definitely was looking at different pieces of news, different research, different analysis here. So Tesla did have a sort of unconfirmed confirmation, I should say, about the robotaxi event, because of course we know that it's been delayed allegedly by Bloomberg. That was the report, and we still haven't heard anything either either for or against in terms of that event. But Hallmark's catalog said we haven't even gotten started with Tesla yet. I've realized even bulls don't believe that Tesla has solved autonomy yet, but it is becoming pretty clear now that it is a done deal. When your car can routinely handle 90 minutes in traffic with 0 interventions, you see it. To which Elon Musk replied and essentially said that the amount of testing time it takes to figure out if new AI is better than the existing AI, as measured by miles between interventions, is the limiting factor on progress. And the better the FSD gets, the longer it takes to find interventions, because they have to test more and they have to find interventions through many, many miles in between them. So this, I think, is about as close to as we get in understanding that, okay, the robotaxi event is indeed postponed by 2 months to October, and that's been postponed from August 8th. And again, it says that it takes a lot of testing time, and that's been one of the limiting factors on progress. So again, a little bit more cryptic, giving us some hints that, okay, we can expect that this news is indeed confirmed. And one more thing I mentioned in my Discord is that if it weren't confirmed, I mean, Bloomberg would have been taking a huge risk, right, by reporting such type of news, because that event triggered an almost 9% sell-off for a company that's worth over $800 billion. So we're talking 75 to as much as $80 billion in market cap, which disappeared like that. So Bloomberg would have been taking a huge risk if they reported something that wasn't already confirmed from their standards. So I mentioned this in our Discord that my expectation is that they had at least a 90% certainty of what they were reporting is factually correct, and indeed coming from a reliable source. Otherwise, they would have never issued a report saying that, because $80 billion in market value, I mean, they'd be opening themselves up to huge amounts of risk and liability here. So that is something to keep in mind. Now, this is fresh. Tom Lee essentially reiterating what Dan Ives said. I was also listening to Dan Ives during a Twitter talk. Talking Tech with Dan Ives or something was hosted by another Twitter user. And to that, Dan Ives essentially said that, look, that's what makes the market, right? There's people that are bullish and bearish on Tesla. and that's what makes a market. But at the end of the day, this doesn't really change anything about Tesla's story related to artificial intelligence or robotics or autonomous driving. That was kind of like his core message, is what he said during the Twitter talk, and also reiterated his $300 price target and $350 on a bull case. So again, reiterating a buy target, and Tom Lee kind of also reiterating that this is, again, very, very important. So again, pointing downwards, so kind of in agreement to Dan Ives' analysis here. And again, these two folks have been more correct than incorrect in their career when it comes to technology, when it comes to Wall Street, when it comes to analyst estimates, and of course price targets. So they of course have definitely a lot of weight in their analysis. We've had Dan Ives on the channel before, we've interviewed him. I'll see if we can get Tom Lee on the channel as well to get some more insight on the market. But bottom line is, Dan Ives tweeted, and I quote, "While the knee-jerk reaction will clearly be negative on a delay of August 8th based on this Bloomberg report that just hit, we believe the timing of robotaxis, the partnerships, the ultimate autonomous AI-driven tech does not change at all our thesis. We await to hear from Elon Musk." And that's exactly what Tom Lee also said, again, pointing down, agreeing to what Dan Ives just tweeted. Now, this right here was the event. This was the event, I think 1 day ago, ARK Invest released a video about robotaxis. And robotaxis is a massive market according to ARK, and even according to a lot of research studies that have been put out there. And to give you an estimate, they see robotaxis to create upwards of $28 trillion worth of value by 2030. So these are all the talking points from that video that I wanted to discuss. Number one is that they believe robotaxis is going to be the biggest AI opportunity. So in terms of all the artificial intelligence out there, robotaxis, they believe, is going to be the biggest one in terms of market opportunity. And speaking in terms of value, $28 trillion in value created by 2030 by robotaxis is what they believe in. The cost of mobility has not changed for the past 100 years, is what they said. And at scale, so once it's adopted and at scale, the cost could come down for the consumer at 25 cents per mile. 25 cents per mile is the cost that it could come down to at scale for mobility. And this right here is the chart that they mentioned. $1.70 back when we were using horses back in the 1800s came down to 70 cents per mile, then 70 cents per mile, and then 70 cents per mile. It's pretty much stayed the same as what is the cost per mile of a personally owned vehicle. Now, I'm not really sure exactly, what type of analysis that have been done here to get to 70 cents per share, because adjusted for inflation, the cost of owning and operating a personal car has not changed since the Model T rolled off the first assembly line more than 100 years ago. And ARK estimates that autonomous taxis at scale could cost consumers as little as 25 cents per mile, spurring widespread adoption as well. So remember when I said that one of the biggest factors, key factors for Tesla's success is going to be both adoption and execution. So in one of my previous videos, I mentioned that there's two words that are really important for Tesla's success. Number one is adoption, and the other one is execution, because those both things are really, really important for Tesla's success. If there's wide adoption, but Tesla doesn't execute well, all this revenue, all this market cap, all this liquidity is going to go to some other stock, some other company, whichever does execute. But if Tesla executes to the best of its ability and there's no adoption, there's no validation from the market, it's all the same. Tesla is not going to make any money. So these two things are incredibly important for Tesla's success. Number one, widespread adoption for robotaxis. I don't know how you feel about robotaxis. I can tell you how I feel. I feel like there's a lot of utility for robotaxis, for something that can come pick you up anytime you want. And there's literally, cars that are driving themselves. Depends, of course, they have to be safer, they have to be cheaper, they have to make sense, they have to be comfortable, they have to be more dynamic, and of course, they can only work in some cities in the world. I doubt that these concepts are going to arrive in India, where the traffic situation is not the best, and probably would not be the best even in the next 100 years. But of course, this is being adopted already in over 20 cities globally, especially in China and over in the US as well. So number one, adoption, right? Very, very important. And let me know in the comment section down below, how widespread do you feel adoption for robotaxis is going to be? Is this something that's going to really get going in the next 5 to 7 years, or is it going to take more time to get adopted widely? Number two, execution. And that's where Tesla's execution and capability comes into play. As we know that Elon Musk has made a lot of bold and ambitious claims, most of which he has gotten completed, but not within the time frame that he first quoted. So it's not the question of whether he can get it done. It's a question of when can he get it done, and is there somebody that can get to market faster than Elon Musk? I doubt that's the case because it does require a lot of training. It does require a lot of data, and Tesla is one of those only companies that has a lot of data, billions of miles worth of data collected, so they can train their model and again make it safer, make it more accurate when it comes to robotaxi. So that was one of the talking points, is that it is going to come down, and the cost of per mile is going to come down. It's going to create a lot of widespread adoption. Number two, robotaxi passenger trips annualized at a rate of over 2 million last year. So this is again one of the factors involving adoption, right? So 2 million miles that have already been completed on an annualized basis, and robotaxis are already operating today. So that is a little bit of validation from the market, but again, nowhere near close to some of the larger numbers that we're excited to see. And if that happens, that is going to confirm one of the two things, which is adoption for this technology. Also, they mentioned that it's going to be 2 times less than a personal car and 10 times less than taxis when it comes to the cost to the consumer for mobility. And again, adoption significantly safer and cheaper. Those are the two main reasons they're banking on, which is going to create more adoption because it's going to be safer and it's going to be cheaper. Statistically speaking, it is quite crazy that it is cars in general, accidents on the road are far more likely to happen than accidents relating to, let's say, when you're flying, or when you're going through a train, right? So when it comes to transportation, of course, driving cars are significantly more risky than any other transport. And that's what they're trying to reduce on, because the less intervention there is from humans, the higher the probability that it's going to be safer. That's what they're banking on, is to make it safer and cheaper through autonomous driving. So again, 20 plus cities globally that have already adopted this. And Tesla today, drivers are driving with over 2 million miles through FSD on an annual basis. And Tesla data suggests that using FSD is 5 times safer than average, which they also showed on this chart over here. As you can see, the 3,200 miles for every one accident or crash on surface streets only, because they're more prone to having crashes, versus the national average of 192 miles. So fewer miles per crash versus Tesla's over 3,200 miles per crash here. And this right here is autonomous electric transport should save basically 10,000 lives because of fewer carbon emissions. So air pollution from gas-powered vehicles, passenger vehicles, associated with almost 10,000 deaths in the US annually. So as this adoption happens, as we switch to electric vehicles, there's going to be 10,000 lives saved, according to ARK Invest, by the time 2030 hits. And this is a ride-hail market, which is likely to hit an $11 trillion addressable market with different price points, anywhere from 25 cents per mile all the way to over $4 per mile, which again, existing addressable market for ride-hail companies in Western markets charging $2 to $4 per mile as well. So, and finally, this is one of the most important charts, which I feel like is going to go underappreciated, and this is where execution comes into play. So far we talked about adoption, where there is widespread adoption already in play. 2 million miles in FSD from Tesla, 2 million miles in ride hailing, and of course autonomous driving on an annualized basis. 2 million trips, which is a big number. So that's already happening. This is where adoption needs to come, because what this chart essentially shows us is that the first movers are going to have an advantage when it comes to the share of the earnings. So 50%, right over here, as you can see, that 50% of the penetration when it comes to urban miles in robotaxis are going to control as much as 80% of the overall earnings potential for this market. So platforms facilitating the first 50% of urban autonomous miles should have generated the bulk of the earnings, which is almost 80%. And everything else, the rest of the industry, is only going to be spread across 20% of the earnings for this industry. So it is going to be a very concentrated and very consolidated industry, is what ARK Invest is talking about in their video. Now, all of this is already the bull thesis for Tesla over the long term, as we already know. But like I said, it is very much of a story as of now, and we need to wait and see how the execution and the adoption ends up being. If you're a Tesla investor, if you're a Tesla shareholder watching this video, and you're asking yourself, what's the future for the company? Look, we can sit here, run the numbers all we want. So if you come over to our platform, we can come over to Tesla and try to figure out what's the intrinsic value for the business. If you come over to fundamental analysis, you come over to analyst estimates, you'll notice that the analysts have a hold rating. These are different price targets. Come down, forecast for the future. We're looking at 11 to 12%, as much as 16% compounded annual growth rate. You come over to analyzer, hit autofill, try to figure out what's the intrinsic value. You come over here, let's say 20% growth rate, 40 times P multiple, share dilution of, let's say 1%, hit calculate, and you arrive at an intrinsic value closer to 170s. Earlier was in the 150s, now we're 170s. You could make a case for 200s. You can come over here, take a look at the sensitivity grid and the matrix as well to figure out how your values would change. But none of that would really matter because these are all based on numbers, right? This is all great, right? You can run the analysis on numbers. You can run the analysis objectively to figure out what the numbers look like. But at the end of the day, it is very much a stock that trades on a story. That story is robotaxis going to be a thing? Is Tesla going to be a leader in that market? Humanoid robots with Optimus, is that going to be a thing? I think we're going to get a separate analysis in a video related to how big that market is and what type of productivity levels you can get from the humanoid robots like Optimus, what's going to be the pricing points, what's going to be the profit, what's going to be the gross margins, what's going to be the revenue. All those things need to be accounted for. And these are all stories for now, because if Elon Musk is a visionary, Tesla is a visionary stock looking forward to the future for the next 10, 20, 30, 50 years out. So this is not a stock that can be looked at from a 1 year, 2 year lens, which most Wall Street analysts will try to do. They'll try to figure out, okay, if the robotaxi event is pushed 2 months, the stock deserves an 8% sell-off. Bit of an overreaction, because 2 months is quite literally nothing when you're talking 20, 30, 40, 50 years out. So if you've got a long-term horizon, if you've got a long-term mindset on this company, you have to understand that that's going to be the price you pay. The price you pay for that long-term vision is the volatility for the stock intraday and intra-week and intra-month, right? Because Wall Street doesn't think that way. Wall Street's trying to beat their targets. They're trying to beat the S&P, and they want to hold on to the stocks that are going to do well for the next 2 quarters. Whereas we're looking at companies that are going to do well for the next 2 decades. So huge difference, huge discrepancy. And I think that's the only point that I want to try to get across. But at the same time, have to be cautious and aware that if Tesla does not achieve any of these goals, does not execute well, or it doesn't get adopted, at the end of the day, it's going to be an electric vehicle company trading an electric vehicle margin or multiple, and that is prone or susceptible for the price to come down. So those are some things to consider and understand. If you are an investor or if you're looking to invest in Tesla stock, definitely do understand what is it that you're buying and why are you buying it. And so hopefully you will have a much better, much clearer understanding of Tesla's future. So hope you all enjoyed this video and found it helpful. Again, make sure you drop a like, subscribe to the channel if you want access to our MoneyVest platform. There's a 51% discount available until the end of this month. With 4 more spots left, you can access and unlock this pricing for life until you cancel, but we're going to be adding a lot more features and tools over time that you're going to love. As always, happy investing. I'll see you all in the next video.